Well, we were expecting them to cut this year, and we've had a view all year long that since the late last year that rate cuts were coming at the end of this year. We had in the mind it's come just that little bit early in the scheme of things, but for the right reason, though. I mean, the story is the right reason, and that is that the New Zealand economy has lost a lot of momentum. Growth has stagnated. The labour market's loosening. Inflation is now coming down. And because inflation's come down and the RBNZ's been convinced sufficiently, they're able to start now taking their foot off the brake. They've had their foot hard on the brake, trying to slow that economy down, trying to get inflation down, and now they can start to release it. And if you look at their own projections, they're now saying they'll be able to deliver a sequence of cuts beyond this. Now, we've had in mind, as I say, they'd cut at the end of this year. We thought they'd cut through next year as well. This is just a little earlier, but it's a good story in the scheme of things.
Why jumping ahead of the Fed? Because the expectation was that the move will happen post-October, the last quarter. And I think that's what the forex markets were also pricing in, which is why the Kiwi dollar was still circling around, teetering around 60 cents.
Well, I think a lot of this came down to, if you listen to what the RBNZ had to say over the past couple of meetings, they didn't think that they'd be cutting interest rates until the third quarter of 2025, 1 year away. That there was still some risk that they might lift interest rates. This has been a really, really big pivot for the RBNZ over a pretty short period of time, over a period of only three months. Saying the next move is like to saying it's right now, and so the market really was sort of thrown off a bit. I think, at least when you look at that guidance that we'd received, it was a long way from what actually got delivered. But as I say, the positive story here is that the RBNZ's feeling that they can confidently now, they've broken the back of the inflation challenge. And so that's good news for growth going forward. They didn't feel they needed to wait for the Fed. I think the market is pretty well priced for the idea that the Fed's going to go next month. They didn't feel they needed to go. They felt they could go early. And so that's what we got today.